Welcome back, everyone. Hope you're doing well. This is Josh Elbow. The video today, I'm going to be going over another watch video. You've requested it based on what you're all doing, based on the YouTube algorithm, based on what people are watching. So we're going to do another watch video. If you're new to the channel, the only thing I ask is that you subscribe for more videos like this and you leave a like on this video. I hope you enjoy. The purpose of this video specifically is how to do it without any money, because most of the people following my channel, the goal with that is if I had somebody to teach me step by step how to get the $10,000 in cash bonuses when I was just starting out, or how to run Facebook ads when I was just starting out. If I had somebody aside from YouTube, which I had YouTube, and YouTube's been extremely helpful in teaching me all these different things. But if I had somebody that walked me through everything step by step, I think it'd be a lot more helpful. So I want to be able to provide that to you all. So without making you wait any longer, let's jump in the video.
Hey guys, Cal Knight with Watch Trading Academy back at you here with some interesting tips and tricks to make money trading the most amazing timepieces on planet Earth, like this Hublot Big Bang all gold, or this Audemars Piguet Royal Oak Offshore carbon fiber and ceramic. So today I want to give you guys some ideas that are pretty cool about how you can actually make money trading luxury watches, even if you're not starting with a lot of capital or you don't want to use your own money to trade those watches.
My recommendation when it comes to any type of investing, any type of business speculation, investing speculation, whatever the case may be, always use OPM, other people's money. Why would you use your own cash when the banks can give you cash, or other people that hold cash you can use their cash and then either back it with collateral or back it with the asset itself that you're purchasing, or put guarantees and risk management in place where the other person's willing to carry the risk for you. Also, I'm going to make another video about why you should only invest with other people's money, but just from a what makes sense standpoint. Why would you be willing to lose your own money, but not somebody else's? If you're not willing to risk someone else's money, you probably shouldn't be making the investment yourself, because most people, I presume, most good charactered people are going to be more concerned about losing money for someone else than they are for themselves, just because we're human beings, we care about our other social beings. But if you're not willing to risk someone else's money, but you're willing to risk your own, what does that say other than stupidity? What's the difference? It's a piece of paper with ink on it. I understand what the money means, but you can get it from anywhere, so I would always recommend using OPM. I hope he talks about in the video. Creative financing is an awesome thing. It's helped me a lot, which is why I promote the bonuses as well as what comes with the bonuses, because aside from the $11,000 now in cash bonuses you can get from the credit card companies and the banks, let's say that's another $50,000 to $100,000 in credit that you're able to get access to, most likely at 0% interest for the first year. That's a house. That's multiple cars. That could be 10, 20 watches depending on what you're buying. So there's a lot of options when it comes to that too. So if you want more information on that, either leave a comment down below, DM me on Instagram at TheJoshElbow, or send me an email at summitsme@gmail.com, because there's some pretty cool shit I can show you.
To leverage creative financing to actually go out and buy inventory, to actually go out and buy, sell, and trade these timepieces that maybe when you're looking at them from the start are saying, okay, maybe $5,000, $50,000 is a lot to me right now. I don't want to put that into an asset to trade it if I don't really know exactly how to trade yet, even though we teach you everything you need to know in Watch Trading Academy.
I don't know anything about this guy's course. However, in the previous video I talked about with trading watches, you can always use the drop shipping model, so you don't have to actually buy and have these assets, these watches in inventory, if you want to call them an asset, even though it doesn't cash flow. You could still consider it a hard asset, the watch itself, if you see the value there. Watches have appreciated in a pretty cool way in the past 5-10 years, and they've been holding their value through Corona, so that's kind of something cool too. But if you see too much risk in spending 5 to 15K, like he said, on one of these watches, you can always use the drop shipping model. And then when the time comes to actually get the watch to the client, then you can go through one of these creative financing ways to get the watch to you and then get it to the client.
So here's just some ideas that you can think about to get started, whether you want to invest in your knowledge in watch trading or you want to go out and actually try to buy a watch, hold it, trade it, and make some money. Number one, this is something that some people know about, but some people don't. PayPal credit. So PayPal has been around forever. A lot of us know it and use it, but PayPal credit is a very easy way. It takes about 2 minutes to sign up, where you get a free line of credit that they're delegating to you as long as your credit isn't shot, where you have 0% interest for 6 months. You get 2 to 5K in terms of that money line, and then you can use this wherever PayPal is accepted, dealers who actually accept PayPal.
What I don't like about this, and I know he might say, he might not, you have to have $20,000 in sales through PayPal to get access to this credit line. and it's only, like you said, maybe two to 5K of a credit line. It's 0% for 6 months, but that doesn't mean like 6 months is nothing. That might be a couple watches that you flip in the meantime. You're going to be much better off with going through either getting a business set up, which I talk about in other videos, how to set up your LLC, how to set up an S Corp, C Corp, whatever. If you're short term, if you're willing to take a very calculated risk with this, you should be able to get another $50,000 on your personal credit side. So this isn't like a bad idea by any means. Getting accepted for it and having under $20,000 in sales though isn't going to happen. So that would be the main caveat there, and it has to be through PayPal, which could be a challenge for someone that started out that might only have 1,000 to 5,000, even 10,000 their first month. It's going to take some time to get to this part.
Pay for a watch with that credit line by going through PayPal. So what happens? Maybe you buy a $5,000 watch, you wear it for 4 months, you sell it at $1,000 profit, and then guess what? You pay off that line that you took out for the credit, and you just made $1,000 without using your own money.
I do love the side of enjoying the luxury asset, let's call it, in the meantime, which I've talked about constantly, whether it's a BMW or watches in this case, or Supreme, like Hypebeast, Louis Vuitton, Gucci clothing. I love the idea of using it and enjoying that luxury, because then you get to basically have your cake and eat it too. You get a taste of that luxury item, and then you get to get out of it and get a brand new one, most likely. I just like that better than just buying it to flip it. I would like to enjoy luxury items, so it can't hurt to do if you're smart about it, if you're careful with these things, if you have insurance on them, like we talked about in the other video.
Pretty nice, right? With 0% interest. Another option you can look at is 0% or low interest credit cards. So as I'm sure you're aware, if you're getting mailers through the hard snail mail, or you've been notified on some of your email inboxes, if you do have credit cards, you'll see these promotions that they come out with.
So this is what I was talking about. Again, the interest rates aren't going to kill you. Let's say you might even if you're paying a 15% interest rate, which is ridiculous to be paying. Like, pay off credit card interest immediately. That should be the first priority, which is a completely another topic. But let's say you're just starting out and you have a bit, like you're using the credit line for cash flow, and you might be paying 15% interest. But if you know that you're going to make 10x on whatever you spend, let's say you spend $100 in Facebook ads and you make $1,000 profit, it doesn't matter that you're paying that 15 bucks over the year on that $100 that you put on the credit card. If you really want to leverage it out, by all means, there's much better ways of doing it. I would find an investor. I would have the bank give you a credit line at like a 3% rate. Some of these COVID loans that are 3% for 30 years are much better options, but I'm not completely against using a card that might have a 15% interest rate on it, if it makes sense, if the deal's right. Again, we don't want to over leverage, but if you can pay it off and you can afford to, and the cash flow is good enough, if you're cash flowing any percent over 15 kinda, by all means try and find something that's better than a 15% rate, because that's literally right. But if it works, it's not awful. Same exact concept as Discover has a deal where they're paying you 5% cash back, and then they're doubling it at the end of the first year on transactions through PayPal. Now, PayPal is going to charge you a 3% fee. So if you go to your friend and you guys create a transaction legally to spend, let's say, $1,000 and get that 5%, but you're paying 3%, you're still making the 2% up front, as well as getting that doubled at the end of the year. So it still comes out to be like $100, and it's free money. So whatever options are available, kind of give that a look, see how it feels, and then go from there. But I'm not necessarily opposed to it. But it is nice to have like a 0% free return on the first year, presuming that you get a positive return.
12, 18, 24 months, whatever. Now, as long as the business or the dealer that you're working with, or if it's a platform like eBay, you can use credit card through PayPal and still buy from a private seller, you can buy watches, even if they're a little higher than maybe you want to buy them at, because you're getting hit with the credit card percentage on the transaction. You can find ways within that time frame to trade in and out of that watch and make money on that watch and on that asset, or a couple watches on those assets as a portfolio, and pay off your credit card before you get to that interest change. And again, it's like leveraging free money, plus you get the bonus of points. There's an added value to not only buying inventory and learning how to trade it. What I used to do is I would invest in the skill sets and the knowledge to learn how to trade watches with some of these options, and also buy inventory with it, so that when the 6, 12, 18 months came up, I had already made my ROI back, paid off that line of interest, and made money on that without ever leveraging my own capital. I got to keep my cash and use that towards other things. Another one is promotional checks. So again, this is something similar to the 0% interest credit card, where you'll get these in the mail from your bank. You can ask your bank about these types of checks. You write yourself a check and you basically get that type of money line delivered to your account where you're having a 0% interest or low interest framework period to work with that. And then after that period, if it's not paid off, you're paying interest on top of that.
I want to say I know what he's talking about. Like, these are more so if you have debt, I believe you get these in the mail, and maybe they're like a consolidation. Like it's basically it's a loan. It's not a promo check. I wouldn't call it. It's a loan. They send it. It looks like a check. I've worked with people that are trying to boost their credit score, and you can use these to pay off like debt consolidation with credit. But I want to say the interest rates on these are crazy too, like 11 to 20%. So again, same exact thing I was saying before on the credit card side. And if it's an intro, let's say 6 months at 0%, it's not crazy terrible either. If it's free money, it's free money. Use it, utilize it, be smart with it. But depending on the deal, the interest rate matters. Depending on how much you're supposed to make, like you have to calculate all these risks based on how long it's going to take to flip the watch, what interest you're going to be paying. If you don't get out of it at a certain time, what's the max loss you're going to have to take on this watch? Calculate all these things beforehand so you don't have to worry about them after. And then if the deal's good, go for it.
As long as it's extremely low or 0%, and again, I'm not telling you to go out and mandatorily do this. Always hold yourself responsible for your own credit report and your own financial health. I'm just giving you ideas. But that promo check is also a good opportunity to give yourself some cash to work with, go out, make some trades, make the profit, and then pay it all back before you actually ever incur interest, which is pretty cool. Number 4, brokering. You will know that brokering is one of the best ways to make money wearing timepieces like this without needing any of your own capital to start. If you have a good network of dealers, private sellers, private buyers, people who will actually buy from you, trade with you, then you can broker almost any deal, almost any watch. You can source watches, you can actually go out and find deals and sell them to people.
Brokering, drop shipping, same idea, same concept. This would be, I feel, more down the line once you have these networks set up. Like he said, I have a buddy that does brokering, I believe, where he doesn't hold these watches. He has his own watch collection, but he sells watches through a broker, but he works tightly with them, and it's extremely, extremely good money and extremely low risk to do this. So this would be a way, I wouldn't necessarily, you could set it up as your own business and then work through the broker, but this would be a safer model, I feel, as well as a much more long-term model than just flipping for a month, the 6-month things. This would be more of like building a business around selling watches that's maybe 5 to 20 years out. But I like this.
Even if you don't have a call for that watch, and make a broker's fee, whether that's a flat fee of like, let's just say like $1,000 or a percentage of the deal.
I think you're going to be better off doing it as a percentage of the deal, depending on what you're selling. If you're selling $5,000 watches, then it's not going to be a big deal. I would go big. I would sell the Pateks and the Rolexes and the Hublots, because you're going to get more out of those from somebody trying to buy those. The people that buy those are a different type of people than the people that are buying $5,000 Rolexes. So you have to know the target market that you want to sell to. I guess that would be one thing I would think about. But if you charge a flat percentage rate, I think you're going to make more over the long term. I think it's a simpler model to use as well.
The buyer and the seller together without ever needing your own capital. Now, if you haven't done this yet, chances are you probably haven't built up the trust to get the buyer to give you all of the funds to do this broker deal. And we teach you how to actually get to that point where you're mastery enough to do that. But there are ways to do this very easily, especially if people trust you. And then the final one for today, investor funds. So if you get really good at watch trading and you're making money, or if you think that you have someone in your life who is interested in investing in you and your ability to make money on luxury watches as assets, you can always tap into investor funds where you're leveraging their money to help yourself generate more money and them generate more money. Obviously, that's a discussion between you and those counterparties to figure out what the details and the speculations are of that. But when it works well and it's a healthy relationship, it's a great way to not only up your buying power, but basically produce dividends for them that are better than any other market, any other stock, any other vehicle that's an investment, while you're giving yourself more buy power and while you're continuously making money and still conserving your own cash, guys.
I like that one the most, whether it's a relationship with a bank or relationship with people that have money, multimillionaires, billionaires, whatever the case may be. I like this so much better. And it took me way too long to figure this out versus trying to make money and then invest my own money and like playing small with only cash flow that I had coming in from my businesses. You scale so much quicker. And when the deal's right, I've said this a 1,000 times, When the deal's right, investors jump on it. Let's say you're watching this video and you go, Josh, how am I supposed to find investors? One, how many people have you asked? Maybe one, maybe two, more than five, more than 10? How many have you asked? Bill Gates, asked like 900 people when he was founding Microsoft? Zuckerberg invited how many people to his room to talk about Facebook? How many people have you asked? Have you even asked for one person? Have you asked somebody, like, well, who's the closest to you? Your parents, your grandparents, your aunt, your uncle, your best friend's parents. You have to have the courage to ask. And the reason that I think people don't have the courage is because they know their idea is shit. You have to have the balls, let's call it. Because I think that's what it comes down to. You have to have the balls to know that the idea that you're pitching is worth it. You can't wait for other people. You can't be some pansy waiting for other people to tell you that the idea is good. By all means, I understand understanding the market and listening to the market. So if the market says the idea is shit, you have to listen to that too. But you have to know that your work ethic is willing to put in the work to get a good enough idea that the market will respond. And then getting $20,000 to $50,000 from people is easy, let alone more. These are baby numbers. I'm embarrassed to be saying 20 to 50K from investors. I'm embarrassed because I know it's baby numbers. Like I'm an adult. I should be getting way more than that. And those are my limiting beliefs I have to work through. We'll get there soon enough. Hopefully sooner than later. If you're seeing this video and you think you can help me with there, like a Daniel G, that's what I need. But it's completely doable. You can get any dollar amount if the idea is good enough and if you're talking to the right people. So I have some good things to say about this video. I like the PayPal credit side. You may not be able to get it immediately, like I said, but down the road, it's something completely feasible. Credit cards, I love. You also get the rewards. So let's say you buy a $5,000 watch. You're willing to take a $200 to $500 loss on that, but your upside is $2,000. So you're willing to take that asymmetrical risk reward of the $2K profit, presumably, but you're willing to risk that $500. If you get 2 credit cards and the bonuses on those 2 cards is $700, or let's say instead you're going to take a $200 risk, you could get 2.5 watches worth of risk. You know that your downside's capped at, let's say, about 200. You could have 2 to 3 downsides, losses, and then all you have to do is get 1 win. Let's say you still lose that 700, you're still at break even. There's no such thing as house money. So this money that you're getting in rewards, you need to play with it like it's your money, because it is. You got the reward, it's yours now. But it can help cover your downside on the cash flow side in the short term until you have money sitting around where it's not as big of a deal from a cash flow standpoint. The idea I like the best is becoming a broker and working with that. It's no risk on your side. If you're new to the channel, the only thing I ask is that you subscribe for more videos like this and you leave a like on this video. Thanks for watching. I'll see you all in the next video.